Hey guys, welcome to the Tuesday edition of Splash.
Tuesday, all
jumped
day.
ahead. I keep saying Splash into Futures. I'm like programmed like a dog. I shouldn't do that. Forex Focus.
It
How
can
are
be
you?
Splash into Futures.
I'm going to let you do it from now on.
Throwback episode of Splash into Future. Not so many futures.
Not so many
Sorry.
futures. Not so many futures at this time. Don't want to dangle
Sure.
anything out in the future, but lots of cool things coming down the pipe. How are you today?
I'm pretty good. It's raining. Woke up a little late.
Is it raining?
I had to Uber in. Yeah.
Well, that's not good.
Which was fine, but
Well,
pretty solid
you
Tuesday.
got soaked last time, so.
Yeah. I try to mix the good with the bad. When I see the rain, I'm like, it might not be so much of a fun walk in, but maybe the rest of the day
What do you
will
need
be
for the
really
bike
good.
to come out? What temperature do
For
you
the
need?
bike?
Yeah.
No, first of all, no rain. Bike plus rain is an absolute no-go for me. But probably like 50 degrees.
Okay.
I would say 50 degrees. Finn, our friend
he's hardcore.
and colleague, he bikes every day of the year, which I don't understand how that even works when it's snow and 0 degrees sometimes. But
He's a trooper.
he's a harder man than me, I guess. But what's going on with you?
Nothing. I'm
You
just
are-
admiring the whole. We had Blue Supreme yesterday,
God.
Black Supreme today.
I'm wearing my best digs for big wigs that are in town.
We've got, guess the part of the board of IG is in. So,
And Big Cliff.
hands up early. I like the way you roll the dice. Sure. I'm sure he's going to be thrilled with that. But
He's a really funny guy.
He actually is.
The meeting yesterday, he was. I don't know if maybe you know how sometimes you get in that mode of like he's traveled here from London. After a day of traveling, you get past that period of like I'm no longer tired. I'm like a different person at this point, like almost like a Jordan flu game kind of situation. And yeah, yesterday afternoon, God bless him, it's like 4 p.m. He must have been, between traveling and being here all day,
Right.
a long 24 hours.
Which is
and
like
he was
2
like
hours past my bedtime in UK time.
on
yes.
fire
Yeah.
with the jokes and the, all the experience and everything else. It was a great talk.
Yeah, it was.
Appreciated it. And then we did the GOAT Awards,
Yeah.
the Tasty Goats, another run.
And our boy Glenn won.
Glenn, yes, from North Carolina, big winner of the GOAT Awards. So good for him.
Yeah. Well deserved.
And then we got just a very normal start to March. Very normal.
How about it? I mean, it's so funny if you were given the secret card that said, hey, this time he's actually going to put the tariffs
Sure.
on
Yeah.
and he will leave them alone, you would be like, okay, whose car can I sell to sell more Aussie and sell more Canada? And that wouldn't have worked out so well. So we're seeing, again, tariffs get put in place on Aussie, on Canada. China, I can't even keep track anymore. China, another 10% on something. Obviously, countries are now responding with tariffs in kind. But rather than seeing, it was interesting because I think the first time we went through this, I had showed you a JP Morgan research piece that talked about dollar Canada's at 144. At that time, it was 142. That if tariffs actually get put on, they see dollar Canada
It was
being
like 155 or
155 to 160
Yeah.
quickly. Not so much the case after the 148 highs post that one day. So the market, in its classic fashion, doing exactly what you would expect it not to do. So the tariffs are in place. U.S. equities taking a drubbing yesterday, another one this morning.
Yeah.
It's already starting out. And it really feels like, it always feels like this in down movement in equities, but people aren't quite sure where to go. Gold is well above 2,900. 29.30, I think, last time I took a peek.
I mean,
this
they
morning.
tried to take that market down.
Oh, they pounded the heck out of it a month end on Thursday and Friday.
Yeah.
They knocked $130 out of it.
But put another 50, 60 into it yesterday.
But we're 29.30 right now, And at 635, I mean, we're up $30 in gold after the $60 they tagged on yesterday.
Jeez.
You would think, wow, that's a pretty big rally to sell. Personally, I've got no interest in stepping in front of that train right now. But digital assets suffering a little bit. And, you know, a mixed bag, and things like yen and Swiss were stronger all last night. Canada lower, Aussie lower, Kiwi lower, Euro was kind of the anomaly. Now everything, the dollar is being sold across the board. We're going to go through everything here, and we're, you know, well above. We talked about, well, what happens when we finally clear 105? What happens when we clear 150 to the downside in dollar yen? Well, we're there.
Yeah.
And are we going to start to see, these are new levels we haven't seen in a long time, will we start to see that velocity that can be endemic in FX when new levels are hit?
Well, so it's interesting, all the asset classes that you just referenced are seeing pretty extreme, I would say, aside from the 2 days in gold last week, pretty one-sided moves. For equities the last couple of weeks, and cryptocurrencies, and a number of those more risk-on assets, they've just been getting hit pretty hard,
right, steadily
the last really 2 weeks, if you want to look at it that way. Currencies here have seen a ton of back and forth. And to your point, just in the first trading day of this week, the first 36 or so hours of this week, we've seen two sides of each of these markets in pretty extreme fashion. Let's dive into, let's do the dollar CAD piece just really quickly, because I think that's been the biggest headliner, and we're going to do some more. We're going to talk about tariffs and how they affect exchange rates and currencies in a second. But yeah, just staying in the platform here, you see on the 15-minute chart, this is really just the action from this week alone. The, first of all, sell-off in dollar CAD, Pete, below 144, which is no small feat. We went out last week above 144.60, right, came all the way down to below 144, and this is the morning of yesterday. So right, the U.S. session is in when this Canadian dollar starts to rally. By yesterday's close, Trump and all the tariff stuff comes out. Oh, it's going to go into effect tomorrow. The tariffs on Canada and Mexico. Market gets all the way up to 145, and that's probably when you're thinking with the JP Morgans and the everything else, right, where it's like,
next
okay,
stop 150.
Yeah, we might be headed towards 150. Has anything changed in the last 12 hours or so, or is the market just doing what the market does, which is not necessarily do what the economists or analysts or armchair traders say?
Right, and I think it goes back to this idea of expectations, and the market's already efficiently pricing and forward thinking. And okay, the tariffs are in, finally. Okay, how long they last? Now the question becomes, I think the tariff. I was actually, for me, out late last night, all of 9:45 at night. It was surreal. But I was driving home and listening to news in the car, because you know I don't like to listen to music. And there's one guy in there still saying, well, he's still got 2 hours to pull this back. And it's like, he's not pulling anything back. I don't know what clock you're looking at, sure, but at 12:01, this is all real. But I think the fact is, okay, these are in place. There's lots of talk about the long-term damage they can do to the economy or whatever. Or depending on who you talk to, they're equalizing the battlefield. But the question is now, okay, you've done your worst. The tariff's in place. The market already thinking ahead, I think, is like, okay, eventually there's not universal, but solid economic consensus that this will just raise the price level in the U.S. And that's going to be both politically and economically untenable.
Sure.
So when do they come off? What excuse do they take to pull them off? And when they come off, where's Canada going to be? Somewhere below 140? Where's Aussie going to be? Back somewhere above 67 cents?
Well, and you put
the market's already starting to move on that journey of of that these are not going to be here forever.
Sure.
Maybe they are. And the market, again, we always talk about pricing efficiently. It does for this moment in time. Do traders get it wrong? And does this become a long-term battle? Sure. And that's where I think, the estimates are that it takes 3% growth in Canada, takes it anywhere down to flat to -1.
Mm-hmm.
And they're already spinning up, the amount of, everybody is now, how quickly we've gone from one rate cut in the U.S. to them pricing in 3 as of
Over the course of the last couple of weeks, yeah.
The last 24 hours, going from 1.5 to almost 3 rate cuts with the fall in SPOOs yesterday. So everybody's going to race back to 0. We'll see if that happens.
Sure.
But I think that forward-looking aspect of it is a really important piece. So we're seeing that play through. So does this make no sense? Well, the tariffs are in. Why isn't the dollar dramatically higher? We've gone through that. The market's thinking past that already.
Well, and we talk about this all the time. At price extremes like this, there is in trading, it's not something that you can say 100% of the time this is the way that it works. But we've witnessed this so many times that I would say it is a phenomenon that exists. This law of diminishing returns at price extremes, which is to say, we've been dealing with the tariff talks for the last several weeks. And the first time that it was like, oh, he's going to put this in play at the start of February, and this is the Sunday open in the first trading day of February, we got all the way up to 148,
right,
which is a massive price extreme for this market going back to, I think it's 2003.
Yeah.
Okay. And so then they take it all out. Oh, they're delaying the tariffs and they might not actually come through. And now they start to put it all in because he's, saying, oh, we're going to do these tariffs. And then the tariffs, I guess, go into effect. And everyone is like, oh, well, now that they're, to your point, now that they're actually in effect, this market has to go higher than 148 for sure. And it's like the market is what the market is. And at these price extremes,
well, that's it.
It's really hard to take this market through another price extreme, especially on a Monday afternoon into a Tuesday when everybody is there versus when this happened, which was a Sunday open,
right,
where there's not so many participants. I'm not saying this market's not going to get up to 150. I have no clue.
Right.
But to your point, it's a lot more nuanced than today's the day the tariffs are in effect, and so this market should be at an even higher price extreme than it was when they were going to be in effect and then they were rescinded. You can't, we always tell people the same thing with Fed rate cuts or rate hikes. The market prices a lot of this stuff in the lead up to the actual event, and it's not like, oh, this is the day of the event and they're going to hike, so I'm going to sell bonds today. It's like, the move's already happened.
And I almost go back, Tom is a big believer in pot odds. And if you're going to say, okay, well, what's the worst he can do? He can double the tariffs. Will we get a reaction from that? Absolutely. We'll see. That may be Morgan's magic tool of getting to 150. But more than likely than not, we're at multi-decade highs. And if they relent at all, pot odds says we're back well below 140 and fishing around a still relatively high level of the mid-135s. I don't know if that's the direction, but this is why I'm less reliant on news to drive long-term opinions, because that's sometimes, again, if you had taken the news and acted on it, if I'd handed you the secret paper that said
tariffs are going into effect,
it's real this time, you wouldn't have had a very good night or day today.
Well, you definitely wouldn't have sold the dollar at any point in the last 24 hours.
You would have been long the dollar against everything else.
A great trade in any market.
Yeah, it would have been painful. So that idea of pot odds, that, as you said, a lot of this is already been priced in. I think what we get now, which is great, is we get two-way action. Now, this move in euro has been dramatic, up to 105.5. And so we're going into the day up 62 pips already, right up near the highs, in an area we haven't been at in a while. This is, again, for a trader, this is what I love. So some of the guys leaning who have done so well being short for that quick trip down from 111 to 102. Well, now you're starting to get a little bit challenged.
Yeah.
You're back to levels we haven't seen in a while. Have we cleared that whole congestion area from December on? No, not yet. But we're seeing, I mean,
this is a hell
I'm
of
not a
move.
candle guy, but we're seeing two strong up days with both. And it'll be interesting to see if today we close at the upper end of the range, then if you're a longer term strategic short, you think the dollar's higher, you've got some deciding to do because tape and market structure is changing underneath your feet.
Well, it's going to be an interesting week no matter what. Even you raise a great point for this euro dollar market where you might say, oh, well, there's not so much, of this tariff news around Europe. It's all focused in Canada, and I should be trading peso and CAD and all these different things. But yeah, man, this is a strong euro market, and I am very interested to see whether we close this week higher or lower than 105.50
Right.
because that's a really, really interesting price for this market looking at the last several
and you look
weeks
at this,
here.
do you think, and part of it is, oh man, I knew it was cheap at 103, and it sat there. It does what it does right now.
Yeah.
We never get a flush and then a 300 pip bounce. That was 20 years ago.
It's been 2 months plus, yeah.
Yeah, it wears you out a little bit being long. You know what? Let's take a look at Kiwi, because we're kind of currency indifferent. Are we off the 55 cents? Yeah, but very different looking chart than euro.
Yeah. Talk about a market that's grinded you out the last couple of weeks here.
Absolutely. But if you're looking for something that's still cheap, now you can make the argument it's not the healthy one. Euro's the healthy one. And I don't disagree with that. And playing catch up in currencies sometimes is frustrating. But this is the case. If there's a sea change in the market about the assumption of a strong dollar, stuff like this becomes really interesting. And you don't feel like I didn't pin the low. And guys, we've all tried pinning the low. That is, from 43 years, my probably single greatest takeaway is, again, dollar yen got up to 168, 172. We were at 150. 25 years ago, the other side of the coin is when we traded from 83 yen, just think about that, down to 78 yen. And me getting stubborn about, oh, this yen can't get any stronger, the dollar can't get any weaker, and it did. So getting those last, 100 pips is not the goal here. It's to find the opportunity when we start to see the markets change.
And it's nice that there's every market that you go between. We just went between CAD, which is absolutely at its historic lows, to euro, which is bouncing back, pound bouncing back, kind of middle of the range, actually looking kind of strong. And then you've got Kiwi and Aussie, which are near their lows, but not trading through them as much as Canadian dollar. And so many different colors here to trade it. It's
Swiss
really interesting.
Yen, safe havening a little bit. It's a day.
But let's
get back into that because we've got some good content.
Yeah, let's get into our segment here because it's going to be very, very relevant to what's going on. Taking a look at how tariffs affect currency prices and exchange rates, Pete.
How topical.
So much going on.
You're not like a secret Doge guy, are you?
I am not a secret Doge agent. But I am here to help explain. Over the last 2 years, Pete, we've done so much explaining of how inflation and interest rates can affect currency prices and exchange rates and the whole dynamic of not only just the Forex market, but all markets. And now, as you and I know, the one thing you can count on with the market is you don't know what's going to be moving the market in the future. But we do know right now it's been tariffs, not so much the interest rate action or inflation numbers or anything like that. But first, let's take a look at how exchange rates work. Exchange rates or Forex prices, same thing as for our purposes here today. They fluctuate based on relative supply and demand dynamics between two currencies. Taking a look at US dollar, Canadian dollar, you can see here the exchange rate for the amount of Canadian dollars you'd get for a US dollar going between, in the last year or so, 135 up to a price extreme there on the upside of 148. Just really quickly, Pete, what is some basic supply and demand dynamics that move a Forex pair like this, U.S. dollar and Canadian dollar, one way or the other?
Sure. Rate differentials, both nominal, which is the rate differential at this time, and the expected direction of travel of that rate differential. The supply and demand of goods being exchanged between the countries and the value of those goods, whether that be, from what I understand, much of the upper Northeast is completely dependent on Canada for not just crude oil, but for diesel fuel, for gasoline, all of it. So it's that trade back and forth and that relative balance of trade.
Well, and you have done, for me, you've made this so clear, which is, is there a greater demand for Canadian dollars? And if so, then this pair here, U.S. dollars versus Canadian dollars, might move lower. The Canadian dollar might strengthen in this scenario. And to your example there, with the interest rate differential, if Canadian interest rates were moving higher than U.S. interest rates, there would maybe be more demand for Canadian dollars to invest at a higher interest rate. Or the other example you use, if, the Northeast is dependent on Canada for oil or whatever, if the U.S. is importing oil from Canada, then there is inherent demand for Canadian dollars to pay for that oil. And vice versa on all of those things. Keep in mind, this is a relative supply and demand dynamic when you're looking at exchange rates. Now let's throw tariffs into this. Tariffs can greatly disincentivize imports from the region witnessing the tariff, which can hamper that currency's demand. For example, the U.S. accounted for 75.9% of Canadian exports in 2024, amounting to an estimated about $350 billion. The entire Canadian GDP was $2.5 trillion in 2024, so a big chunk of product coming out of Canada. A 25% tariff from the U.S. on Canada could greatly diminish Canadian production and the demand for Canadian dollars. Hence, that chart that we just saw, if the U.S. is going to put tariffs on Canada, the demand for that Canadian dollar might soften.
Yeah, absolutely. And on the other side of that coin, the Canadians put tariffs on U.S. goods. The demand for those U.S. dollars in Canada shrinks commensurately. Yeah.
So there's your example. Now let's get into a real world example of some of this stuff playing out, because we've had it's no matter what you think about Trump or what's going on, what is really nice is
get caught up in the politics. We're traders, and that's the joy of this. We all have our political views, but within this, we're getting markets. We look for opportunity and volatility. This is great. Let's not tie our mass to a political agenda. Doesn't mean we all don't have an opinion. We all don't care. But that's not what our job is. And our job right now is to find opportunity.
Well, even outside of trading, if our job right now is explaining how tariffs affect exchange rates, what's really nice is that we had the head fake of we're going to put these tariffs in, and then they didn't put them in, and now they may finally be putting them in. So as an example, you get to see actually exactly how much this tariff was potentially worth, because this U.S. dollar, Canadian dollar market went from around 144 all the way up to close to 148, which is a big move for an exchange rate or a currency market. And then the tariffs were delayed, came all the way back to where it was trading beforehand. And now it looks like those tariffs might be put back in place. And so you get to see this stuff play out live once again with these exchange rates. Tariffs can often be interpreted as strong for the region imposing them and weak for the one receiving those tariffs. Now, the question becomes, how long do these tariffs last? Of course, that can be, like we just saw in that example, days. It can
There's
be.
been steel tariffs that have been put on the Chinese and the Japanese for 20 years. So it's not, again, to say that, well, this seems so cataclysmic, it's just a bluff. The market's interpreting there's a My impression is the market's saying there's a finite timeline to these. We don't know that.
Exactly right. And you go back to the late 1800s, early 1900s, and for about 50, 60 years there, that this was the main way that the U.S. conducted business in terms of preserving U.S. businesses, and also keeping in mind that Trump did introduce tariffs in his first administration, which have remained throughout the Biden administration.
Absolutely.
And so, again, but that is what spurs on the volatility and opportunity in a market like Forex, is the unknown. If we all knew, oh, we put these tariffs in and they're only going to last 30 days and then they're going to be taken out, the market probably wouldn't really have moved at all. But you can see here on the monthly chart, this US dollar CAD market is right there at extremes going back to 2003. We'll see what happens from here, Pete. But that's how tariffs affect your currency prices and exchange rates.
You know, that was a great walkthrough of a solid example, and it doesn't. You can go down this rabbit hole and get lost in macro and numbers, and it doesn't get you any further in making good trading decisions. It's a great piece of content.
Awesome. And we will stop there, but we'll be back for more tomorrow. Stay tuned for Tom, Tony, and Vanetta coming up next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.